Hello and welcome to Big Deal. I'm Nisha Poddar, and today we have with us the Bain Capital top team here to talk about their investment strategy in India and how the investor climate is really looking like for this particular year. Let me welcome on the show David Gross, the co-managing partner at Bain Capital, and Pavninder Singh, who's a partner Bain Capital, and he's based right here in India. So David, welcome to Mumbai.
Thank you.
What is it that you're picking up here? And when we look at the overall scenario at the beginning of this particular financial year with geopolitical tension, and there is inflation and interest rate cycle turning that we are expecting, and big elections in India and in the US,
Yeah.
How are you seeing as we start this financial year from the investor point of view?
Thanks. Well, first of all, thanks for having us here. We live in exciting times and turbulent times. There's a lot going on in the macroeconomic landscape. I would say that it's, in short, better than expected. You know, we came into this year thinking we would see the typical economic cycle after high interest rates, a lot of government stimulus in the US, that you'd see a weakening. But actually, you're seeing things turning out to be pretty strong. And this is what's causing there to be higher inflation. But beneath that is good, resilient growth. You've had a strong labor market. You have strong manufacturing in the United States right now. And so I think we're happy with the balance of where we are. Europe has kind of been bottoming out a little bit. And Asia, I'd say, is a bright spot. Clearly, you know, India has been a really strong and resilient growth driver. But other markets like Japan have been, you know, positive surprises as well.
Okay, so Japan is also looking good. They've, after a very long time, they have to raise their interest rates.
Yes.
So that's also one thing which is going to have a global impact, and especially the FDI inflows into India as well, hopefully.
Yes.
Now, Pavninder, we spoke very long back, and since then, Bain Capital has made some very big investments, and we'll talk about them. But in the very beginning, $7 billion in the next few years. How are you looking at ascertaining where the growth opportunities are?
No, look, it's very exciting times in private equity in India. We've put that in context. Over the last 18 plus months, we've invested over $2 billion as a platform in India. So as we look ahead to the next 3 to 5 years, 7, 8, 9, 10 billion, I think, is sort of the range that we aspire to. And I think that's, indicative of the opportunity and the acceleration in the investment opportunity. I would say there's a few things that go into that. Obviously, there's been, great fundamentals in terms of the foundation across our physical, digital infrastructure, a lot of the reforms that have been laid. And I think that is the foundation for the economic growth that is exciting investors globally about India, including ourselves. I think within the private equity industry, it has evolved to a place that I think suits investors like us, which is more scale transactions, more control transactions, more global businesses where we can leverage our global platform to help these companies accelerate their journey. And I think that creates more opportunities. And then really across sectors, I mean, financial services, we've been very active. Industrial manufacturing, which I think is seeing a lot of interest now with the Made in India and China Plus One. It's one of the sectors, some of our initial deals here, Motor Corp and others, have been in industrials. So that is a core focus area for us. Knowledge industries, so tech services, continues to be a pretty exciting area, especially with Gen AI, which I'm sure we'll talk about.
Yes.
And healthcare. So I think across the gamut, we're pretty excited, and we think there's going to be, lots of opportunities to get to that target, and hopefully more than that target.
All right. So these are many of the sectors which are automatically the choice of every private equity because of the inherent, trends in those particular sectors. But David, what is it about India which is exuding so much confidence, especially amongst the private equity players? Because every private equity player that has come to my studio and spoken about India for this particular year, and there have been many, actually, global, leaders coming here, and they have increased the pace of investment in India. So what is it that is really working well?
Sure. Well, we definitely think it's India's moment right now. I think it's the convergence of some trends that have been happening for a number of years. The first are some really powerful structural changes that have been made to the economy. Difficult to do and have taken time to manifest the benefits. But you're seeing that now with the ease of doing business, with the focus on some of these manufacturing, high value-added content type industries, which tend to pull along logistics, distribution. It pulls along consumer spending. You've seen this positive, kind of virtuous cycle of growth in other Asian economies, and that's happening in India now. The second is political stability. I think it's not an overstatement to say that this is a country that has maybe the most stable government set up right now. It's, I think, the first time since the early 1960s when you had a leader almost to be on a third term. And that's really important. It leads to consistency of policies, the ability for long-term investors to make those bets on the India consumer, on infrastructure, in other areas. And third, as Pav was mentioning, you're kind of in the second generation of investments. You have great entrepreneurial Indian families and corporations who launch businesses that have grown a lot, and they're now ready to, in some ways, turn them over to new owners to think about the next generation of management. And this is a big trend that we've seen in private equity markets in the US and then in Europe and then in Japan, and now you're seeing it in India. Put all those things together, and that gives you a very, very powerful mix to support growth. And that's why I think everyone's really excited about India.
All right, so many aspects really working well for India. Do you think China plus one, that benefit, we have been talking about that for a long time. In your view, has that played out already, and what is the potential there?
It is playing out, yes. And this will also be a long-term structural change for which we're in the early innings, to use a baseball parlance. So you've seen it directly because large companies need to have backup plans for their global supply chains. And they were very concentrated in China for many years. India is really one of the few, arguably the only scale economy that's got not just the infrastructure, but it has the talented labor that has got the positive and stable policies, as I was just mentioning. And so you're seeing it. We have investments. We invested in a ports business called JM Baxi, and that saw significant benefit from new manufacturing goods inflow and outflow. This is about China plus one. We have an investment in a specialty agrochemical synthesis company. A lot of this production used to be done in China. That's now shifting to India. So it's for sure happening. There's going to be more, because as you get these more complex supply chains set up around Apple, around Tesla, who I believe made a big announcement today, that again pulls other componentry, high value added technology, materials and inputs, that's going to lead to the next wave of growth. So it's for sure real, it's structural, it's long term, and I think it's going to have big benefits.
Right. So sectors of the future are also developing very fast, and we are at a nascent stage of developing. So that's also a growth potential. But Pavan, when we talk about, Indian investments, how has the experience been over several years of your existence here in terms of the return parameters, the exit opportunities? You made a very large investment. We'll talk about that.
Yeah, no, look, overall, it's been a great market for us. It's one of our top two markets in Asia, both from a deployment and return perspective. Like I said, there has been an evolution, both in terms of the nature of deals, the scale of deals, and probably most importantly, I think, for investors, and it goes back to this interest in India. Over the last, call it 3 to 5 years, we've seen a step function change in the liquidity that investors have been able to get from India, right? And that's a function of both strategic interest. So our investment in JM Baxi, we eventually sold to Hapag, which was one of the largest German FDI into India. Interest in the public markets. So the evolution and sophistication of public market investors to buy large blocks and stakes from private investors as they're looking to sell down. That's been an important source of liquidity. And so I think when you put that all together, it's actually been a pretty attractive market, both from a deployment perspective, the return generated, and then most importantly, actually getting liquidity on those returns to return capital to investors. So it's been one of our top markets, and we think it'll continue to be one of our top markets in Asia.
So David, Pawan, hold on to your thoughts, and we will come back with more discussion on Bain Capital's India strategy and some talk about their portfolio management over here right after this short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal, and we are in discussion with the top team of Bain Capital. Now, Pawan, we were talking about the India approach, and you spoke about the themes. A very big exit has been made after 6 years in a large bank, Axis Bank. How has that particular experience been? And in terms of returns, how do you see that? Will that also encourage you for more bank investments?
Sure. No, it's been an incredible journey in partnership with Amitabh and the team and the board. When we invested in Axis several years ago, at the time, it was just coming out of a lot of the infrastructure lending related challenges. It was a bank that I think at the time had 5% ROE, gross NPAs north of 5%. And if you look at the last quarter, they had some of the best numbers in the street, right? 19% ROE, 23% growth, gross NPAs at under 1%. So it's been an incredible transformation, and I think we've been really lucky and to be able to partner with that team and support them through that journey. The stock price is up more than 2x from where we invested. So it's been a great partnership. We're really happy and proud of, I think, what we've been able to do with the team there at Axis. And I think it also has given us a great insight and view into the broader economy and financial services that we hope we'll leverage into more investments in that space.
But financial services is something that you have been focused on, like 361, a more recent investment of yours. What are those potentials and propellers that you see in this space and the company?
Yeah, no, 361's another great example. Karan and Yatin have built a great business. It's really a play on wealth creation in India, right? And as that wealth looks for professional management and investments into more alternates, and 361 is the market leader in that space. Just as a statistic, AIFs, which are alternates, one of the areas they're a leader in, has grown more than 3x in the last 5 years. And I think they've been one of the pioneers and very innovative, players in that space. And so, we think they're really well positioned, and we're excited about that journey. But to your question more broadly, if you look at financial services, they're in a bucket that we call more fee-driven businesses. And we like that space a lot, whether it's across asset management, wealth management. We think insurance could be interesting, especially as we potentially move to a unified license. That may see consolidation opportunities there. Lending has obviously been a segment we've been quite active in across Axis, L&T, more recently Bain Capital. And there's certainly parts of, I would say more specialty lending, whether it's affordable housing, SME, that we think, have really long runway for growth. And so really across that landscape, I think there'll be interesting opportunities. And, these are businesses that need capital over time. So I think it'll continue to generate opportunities for private equity.
All right. So these are the key areas. David, in your overview of the financial services sector globally and in India, the key trends and the potential you're picking, and also Fintech, that's an area of potential plus concern. What's your view?
Yeah, all these trends Pop talked about, it mirrors trends we're seeing globally. The whole financialization of wealth, with more and more consumers coming into wealth and needing places to manage it and invest their money. This is a global trend. Insurance, as we see with aging demographics around the world, and again, a lot of assets to be managed. This is a really big growth area. We at Bain Capital have a business unit that is completely dedicated to making investments in the insurance sector. And then you mentioned, Nisha, Fintech, which is a really exciting area, again, a focus area for us. We have a dedicated global vertical that invests in Fintech. We have a crypto fund that invests in some of the more emerging technologies. And here you're seeing the confluence of big advances in software and AI technology with the big financial payments infrastructure that's demanding a lot of change for efficiency purposes, for ease of use with consumers, for security concerns. You know, a lot of people kind of think about fintech and crypto, and they think about some of the risks and issues, but these are actually some of the really solid ways of managing security issues to get people confident in secure payments. And that, as we've seen in India with the UPI system, that's a huge benefit to economic growth.
That's right. UPI has been a game changer in India, and like that, we are also building many other such digital highways,
Yes.
which doesn't give any monopoly to any player, and especially the
utilities. Yes.
Yes. So probably infrastructure of the future. But Pawan, recently many private equity players have started talking about manufacturing. That has been a capital intensive sector in requirement of funds, but private equity has steered clear of that. But you have made in the past some investments there in Hero MotoCorp. What do you think about this space, and what's Bain Capital's view for manufacturing investments?
Well, we're very bullish on manufacturing. Like you said, we've been investing in that space, obviously globally, but even in India now over 14 years ago was our first investment. There's a lot of trends that support that. So clearly China plus one, made in India, we've talked about. Through J.M. Bakshi, we've seen some of the investments in logistics that have reduced the cost to manufacture in India. I think there's a lot more capability in human capital development that's happening in India to support more value-added manufacturing beyond assembly. I think the other piece that's fallen into place is really global interest to invest in scaling India. I think before it was very easy for companies to just say, I have a base in China, I have a base in Southeast Asia, let me continue to scale that. And I think what you've seen for a lot of the global reasons, they feel we have to scale India, we need an at-scale alternative for our global supply chains. And we're seeing that in a lot of the companies we look at where initially you may not be the lowest cost. I think you have to get to global competitive cost. But investing to scale manufacturing, obviously Apple gets a lot of the headlines, which is, all the investments they've made in their supply chain. We have some portfolio companies that cater to Apple that, we're excited about those prospects. So, as we step back, I think, manufacturing, assembly, and, that spans both electronics, automotive, chemicals to a certain degree as well, even within pharma.
Yes.
We think there's going to be a tremendous growth, and those companies to scale will need capital, and that creates the opportunity for private equity.
All right, so that's an opportunity that you're ready to take here. And David, talking about technology, and that has really propelled a lot of changes and many business opportunities. Now, from your point of view, vantage point, so to say, how do you see the technological shift, generative AI, and in fact, AI has become a household name only in the last year. How do you see this momentum building?
Well, it's an incredibly transformational set of technologies, and we're looking at it from a couple of different perspectives. First is how it can help our business directly using AI to analyze data-intensive issues, to ensure that we have the most efficient operations. So it's always good to start with using it and really understanding the impact. But then importantly, across our portfolio companies.
Right.
And we have a lot of software companies, and AI is really revolutionizing the development process to develop code and software, and really changing the cost structure there. And so you need to be ahead of the curve.
So cost structure and business models, those
Yes.
are going through a huge amount of disruption. But I want to ask you about the special situation opportunity that you see in India,
Yes.
and what are the requirements for India to attract more inflows from Bain?
Right. So this is an interesting area of investment where you have rapid growth, but at the same time you have dislocation. And so you need these flexible forms of capital that may allow a growth vision, but also provide some type of structured return. And that fills a very important space in where we see the development of India today.
Right.
And so we have an active special situations business which will make mezzanine investments or capital solutions to support founders and entrepreneurs who are maybe not quite at the point where they're taking their business public, or they might have asset-backed businesses. Also real estate, you're seeing tremendous growth, undersupply of real estate, and special situations, real estate oriented funds.
You made a REIT investment, which is growing pretty fast. Yes.
Exactly, to support this growth and provide capital up and down the structure to enable this growth.
All right, and Pavan, final word to you, and a quick one. If you have to choose one sector which has the highest potential in your view for Bain Capital in India, which one will you pick? I know it's a tricky question, but a quick one.
I'll answer it differently. I think rather than picking a sector, maybe I'll pick what we call an archetype, which is platform plays. We think partnering great management talent with potentially smaller starting bases, can create really great opportunities to build businesses.
Yes.
I'll give you an example. In 2017, we started a data center platform with really just a team and a greenfield here in Mumbai.
Yes.
Today, it's the second largest data center platform in Asia. And so, that applies across industries, but I think that's an archetype we're very excited about.
That's right. And that's where private equity can really play a very meaningful role in scaling up businesses, making it big, and value creation, therefore. So on that positive note, thank you so much, Pavan, David, for joining us and sharing your thoughts on your investment strategy and the various themes that are really playing out. Thank you so much. Have a great year. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.